Okay, good morning and good afternoon. Welcome again to our Washington Weekly Update through the Bloomberg Intelligence team here in the Washington, D.C. Bureau. What I want to talk to you today is I want to take you through a little what we're going to see in Congress. Then we're going to talk about some of the research that we've just put out recently, and I want to end it talking about the Consumer Financial Protection Bureau. So, what are we seeing in terms of Congress? Well, we have a couple of hearings going on this week. One is over at the House Financial Services Committee. This is on June 12th. This has to do with the fallout of the FDIC and the toxicity of the culture that was identified over at the FDIC. Now, if you remember, FDIC Chairman Martin Gruenberg has agreed to step down, but that's only when his successor will be confirmed. The key words here are will be confirmed. Bloomberg News has reported that CFTC Commissioner Kristen Johnson is in the mix, and there's been discussions about having Commissioner Johnson go over to the FDIC. But really, it's going to be extremely difficult for the Senate to confirm a successor. Maybe they can do something in terms of taking an already confirmed person and moving them over. But until then, Chairman Gruenberg remains at the FDIC, and the work on the Basel III Endgame and everything else just continues. But expect some fireworks over at the House Financial Services Committee because that's going to be certainly an interesting hearing to watch. We also have the director of the CFPB, Rohit Chopra, testifying on Capitol Hill this week. First, he's going to go to the Senate Banking Committee at the same time as that FDIC meeting. That one will be fairly more straightforward and more, I want to say, just in tune with what you see when the Senate Banking Committee doesn't tend to be as interesting as the House Financial Services Committee because there's less, obviously, people questioning, and the House Financial Services Committee and just the House committees in general tend to have a little bit more fireworks because every member gets their 5 minutes and so forth. So I would anticipate June 13th, Thursday, to be the hearing to watch because I am interested certainly in what the Consumer Financial Protection Bureau is going to do now that the issue over their funding has been settled by the Supreme Court. Now, if you're not following the CFPB, the Consumer Financial Protection Bureau has sort of had a cloud hanging over it for the last few years due to this issue of its funding. The CFPB is not directed by funding through the appropriations process by Congress, but instead the CFPB gets its funding directly from the Federal Reserve. In layman's terms, essentially the director of the CFPB writes a letter and says, hey, I think I need X millions of dollars to run my agency from the Fed. Fed says, great, here you go. Now, there was a lawsuit over this. It went all the way to the Supreme Court, and the Supreme Court decided that the CFPB funding structure is constitutional. Now, there are still other issues related to the CFPB that are making its way through the courts, but the CFPB, for the first time in many years, has this cloud lifted over its head. And if I'm Director Chopra, I'm jumping at the gates and coming out like in the Belmont Stakes, coming out really quickly to try and make my mark. So just last week, we saw the CFPB finalize its proposal on open banking. This is a very more technical proposal, just more in terms of allowing customers to transfer information back and forth between their financial institutions. So going forward, if you hate your bank and you want to transfer your data to another bank and make that process simpler, that should be the case. We also saw the CFPB put out a proposal on buy now, pay later firms, essentially treating those firms the same way as they are credit cards. Now, I'm going to try and do something new this week. I'm going to try and share my screen to show you some of the research that we're putting out. So let's see if this works. I hope it does. So, no, I don't think that's working. Let me see. Is that working? Yeah, okay, that's working. So what we are seeing right now is this is my bio that's on the terminal. And so I'm going to go to my research. And one of the research pieces, if it's highlighted, it means that I've just clicked on it recently. But what I want to take you through real quick is this is how our research works when it comes to if you have access to the terminal. And what you can see here is that we read through the CFPB buy now, pay later rule, and we think it favors Affirm, Klarna, and those already established buy now, pay later firms. We actually read through it. Even though it's going to treat them the same as credit card issuers, in the operational costs of that proposal will increase. Ultimately, we think this is going to be, though, to the benefit of buy now, pay later firms over the detriment of startups in the United States. because if finalized, these lenders would have to investigate disputes, offer refunds, provide billing statements. These are actions that most of the market leaders already perform. So what the CFPB did here, in my opinion, is yes, they did put more additional information out there and more increases in operational costs and more, standards, but for a lot of those already existing buy now, pay later firms, it's going to help them establish market share. And we've seen this before with other CFPB regulations. It's just that in this case, it's pretty much going to be, I think it's a little bit more straightforward. So, if you've never seen our notes before, it's just like what's at stake for these companies. Here's additional language about the market share gains, and then here's the outlook. Now, even though the CFPB put this out, we're giving it a 30% chance of finalization this year because, look, it's an election year. These rules, if you pay attention to Washington, these rules take time. They at least take, fastest I've ever seen it for something like this is about nine months. Most cases, it's usually around 18 to 24 months for a regulation like this to be finalized. So companies have until August 1st to comment on the rule change, but just remember that this is a process. They're not going to finalize anything before the election. Probably will finalize it next year, so that obviously that number, if the Biden administration wins re-election, that number is going to jump up dramatically. And then just some of the timeline you could see here. It's certainly feasible they could get it done by fourth quarter, but we actually think it's going to be more likely the first half of 2025. Before I even, back then I just said it usually 18 to 24 months. This is a more technical rule change because essentially what you're doing is you're taking the buy now pay later lenders and you're already putting existing regulations on them. So it's a much faster process than if you were to actually create a new regulation to that certain extent. So there's another note that I actually wanted to take you through as well, and this is a note that we, the policy and litigation team, put out last week talking about our policy election matrix and what we can see. So if you've never seen our policy election matrix before, it's located in the terminal of BI laws. And essentially every policy that the team is working on at this point is listed here. And it provides what I call is the 20-second view. So if I'm a generalist investor and I really just want to see what we're writing on, well, I've heard something called the Basel III Endgame before. What is that? Well, Basel III Endgame is here. In a Biden scenario, we think there's a 60% chance of finalization. In a Trump win, that will drop down to 30%. Both of these are negative for the banks because it will ultimately increase capital requirements. And here's the policy detail. But if you click on this note, then you get the 2-minute view. And the 2-minute view is the same watch format that I showed earlier. So, but there was another piece that I wanted to put out and was talking about the highlights of the matrix and what we have seen in terms of, there we go. This is our large report on, and this is all available via PDF. If you ever want a copy of this and you don't have a terminal, just feel free to ping me and I can get this to you. But what we did is we highlighted the scenarios between Biden versus Trump. So in a situation where President Biden wins, we think that capital rises can increase for banks, then you get deregulation under Trump. When it comes to asset managers, non-bank financials face a harsher climate under Biden. EV tax credits look safe with Biden, not Trump. So you get the idea. Healthcare insurance, ACA revenue is at risk with the election. So we went through and we talked about broadband, we talked about antitrust, tax, and so forth like that. So if you need a copy of this, just send me an email. Even if you don't have a terminal, we can hand these out to friends if we're happy with it. Or look, you're a friend, you get it. So other things that we want to talk about, well, the DEA in reschedulization. So I finally went through the proposal that came from the DEA when it came to marijuana schedulization. This is obviously the proposal that moves it from Schedule 1 to Schedule 3. There were two quick things that in that multi-100-page proposal that I think is interesting. One is that the process is not going to move fast. The way that the proposal is read, it's not one of those where, a couple weeks ago I said that I think if they tried to move fast, they can get it done by the end of this year. In reading through the proposal, It's not going to move fast. This is definitely going to go into 2025. Certainly feasible they could get it done by the end of this year, but I certainly think this is going to go into 2025. The other thing was interesting in that proposal was there was language that specifically said, you know what? Let me pull it up real quick, just because I want to make sure that I get this right. Um, Let me go ahead and make sure because I think this is significant. So there was language in there that the DEA specifically said, um, okay, that the DEA had not yet made a determination as to its views of the appropriate schedule for marijuana. So here you have a proposal coming out from the DEA proposing moving it to from Schedule 1 to Schedule 3, but yet in the same proposal, the DEA put language that said that they had not yet made the determination as whether it should go from Schedule 1 to Schedule 3. AKA, the White House wants this, other people want this, but as we've talked about time and time again, the DEA, and we've heard from many through the grapevine, through the staffers over there, that they are not happy with this. The DEA has not yet made that determination. So for me, this was a political exercise to get it done. The DEA will probably stonewall or like stop or slow this and so forth. And I'm not saying reschedulization won't happen. It's just it's not going to be this year. I think it's going to be dragged into 2025, potentially even longer, and certainly is going to be a political decision in 2025 if President Biden wins. Now, the last thing I want to talk about is some work that's being done in the Congress this week. If you're in the defense industry space, this week is your week. The House and the Senate are both going to be discussing the National Defense Reauthorization Act, or the NDAA, National Defense Authorization Act, the NDAA. This is the bill that funds the Department of Defense every year, and this is generally the bill that isn't very partisan and usually gets done. You know, everything else gets kicked the can and so forth like that. The NDAA usually gets done. For what it's worth, the House is going to be debating a measure that brings in about $895 billion to the Department of Defense. Most of that will go to the DoD. I think there's about $50 billion that's earmarked for other stuff. And just to give you a flavor of how partisan it is, it passed the House for Armed Forces Committee 57-1. So this is generally, I think, more of a House versus Senate debate versus a Republican versus Democrat. And look, anything can happen with the NDAA. This is the easy part. The hard part comes later this year. So, but if you're in the defense space, give me a ring if you want to talk more specifics about that. I can certainly put you in touch with some of my defense colleagues as well up in the Princeton office who are covering this as well. So, I want to just, again, stop there. I really try and keep these calls to about 10 minutes. So thank you very much for your time. I wish you the best of weeks. And again, if you have any questions, please feel free to reach out and we'll talk soon. Thank you again.